For years, the United Arab Emirates was the ultimate tax haven. Entrepreneurs and investors flocked to Dubai, lured by the promise of zero taxes, minimal regulations, and financial freedom. If you set up a company there, the taxman simply didn't exist. But times have changed. The UAE is no longer the Wild West of offshore business. The government has tightened regulations, introduced corporate taxes, and is cracking down on shady accounting practices. If you still think you can run your UAE business the old way, treating it as a personal ATM and skipping documentation, you're in for a rude awakening. So what's changed? And more importantly, what does this mean for business owners in the Emirates? Let's break it down. First, let's address the biggest misconception. Many still believe that the UAE is tax-free. That was true once. But today, if your company earns over a certain amount, you're paying taxes. There's now a 9% corporate tax on profits above 375,000 dirham. That's just over $100,000. And if you exceed specific revenue levels, you must register for value-added tax. The days of running expenses through your company with no questions asked are over. Want to buy a luxury car and write it off as a business expense? Good luck explaining that to the Federal Tax Authority. They now demand clear invoices and a legitimate business purpose for every transaction. But some people still think they can game the system. One common trick? Paying yourself an absurdly high salary to avoid corporate tax. Let's say your company earns $5 million in profit. Instead of paying corporate tax, you give yourself a $4 million salary. Seems clever, right? Wrong. The FTA sees right through this. If your salary isn't reasonable for your role, they'll flag it as tax evasion. That means penalties, audits, and back taxes. So how much is a reasonable salary? Well, it depends on your industry. But if you suddenly start paying yourself millions while similar positions make $100,000, expect scrutiny. And here's another mistake many business owners make. They assume that because the FTA is still catching up with enforcement, they won't get caught. Right now, the system is overloaded. New tax rules, VAT enforcement, and a flood of company registrations have created bottlenecks. Some think they can slip through the cracks. But tax authorities have long memories. In Europe, they can audit businesses going back 5 years or more. The UAE will likely follow suit. Just because you aren't being audited now doesn't mean you won't be in the future. Once the FTA catches up, they'll start digging into past transactions. And if they find irregularities, you'll be facing serious consequences. So why is this happening now? The UAE isn't acting alone. Western governments, especially the EU and the US, have been pressuring the Emirates to tighten financial regulations. They want to prevent money laundering and tax avoidance. This is why UAE banks are enforcing stricter compliance measures. Wire transfers, crypto transactions, and large cash deposits are under more scrutiny than ever. If you don't have solid documentation for your income and expenses, you're putting yourself at risk. Now let's talk about how to protect yourself and stay compliant. First, be honest with your reporting. Don't try to hide revenue or inflate expenses. The penalties for getting caught far outweigh any short-term tax savings. Second, hire a competent accountant. Not the ones who tell you don't worry about it or promise loopholes. You need someone who understands the new tax landscape and will keep you compliant. Third, ignore bad advice. Some company formation agents still claim that the UAE has no real enforcement. That's outdated thinking. The FTA is ramping up. Ignoring the rules will eventually backfire. One final thing. Some people think they can just operate as an individual instead of registering a company. After all, the UAE has no personal income tax, right? Well, not exactly. If you're receiving large amounts of money in your personal bank account, the FTA may classify it as business income. That means corporate tax applies. Just because you don't have a company name on the transaction doesn't mean you're invisible. But what about capital gains? Good news. Profits from real estate, cryptocurrency, and other investments are usually tax-free in the UAE. But you'll still need documentation to prove that your income isn't from business activities. So, what's the takeaway? Unfortunately, the UAE is no longer a tax-free paradise where anything goes. The government is tightening regulations, tax enforcement is increasing, and the days of running a business without documentation are gone. If you operate in the UAE, you need to adapt. That means proper accounting, compliance with the FTA, and a realistic understanding of how the system works. The old rules no longer apply. If you don't adjust, you'll be left dealing with penalties, audits, and legal trouble. The choice is yours. Get compliant now or risk paying the price later. For anyone serious about protecting their wealth, Bulletproof Asset Protection is a must-read. This special report provides valuable secret strategies to make sure your money can never be touched or even found. You'll discover how to easily open secret bank accounts, You'll find out how to establish anonymous companies and trusts and the best jurisdictions around the world to keep your assets private and secure. Follow the link in the description to find out more.